Good everyone, welcome to CAPITALFX Academy. Yeah, today we are going to discuss about forex in continuation of our previous class when we were talking about how forex works. Now, I once mentioned a lot of things about forex. I wanted to just see this class as a discussion. Now we are discussing. We want to start trading, so we are discussing so that you understand what you're walking into. So I already explained how forex works. The exchange of currencies from one country to the exchange of countries currency of a country to another. You understand the exchange rates. So now I just want you to understand that when you want to start trading forex, like forex trading, I mean foreign exchange trading, now there is something we call broker. Now a broker is a company that allows you to trade and exchange. You understand? So in different brokers we have XNS, FS, FBS and co. Understand? So now if you get to your broker, there is something we'll call ask and bid. Now you can link your broker to MT4 or MT5. You understand? So when you link it, you will see that okay, you want to take a trade. Now this the current market price. Well, this you're looking at this screen now. This trade you're seeing is the actual movement of a market. Then if you go to your MT5, you will see something like another line coming up here, another line coming down here. You understand? Then this one will be in the middle. Now these two lines here we call it spread. You understand? We call it spread. And now you might be asking, what is the meaning of that spread? Why do we have spread? Okay. The thing there is that the work of this spread is just the company telling you how much they are willing to buy. Now let's assume this gold. On this screen, what you are looking at is gold. Now let's assume on this gold, you want to go in on a buy. Now before I explain this, I want you to understand that there is different ways of executing a trade. There is different way to execute a trade. Now we have buy limit, we have sell limit, we have buy stop, we have sell stop, we have CMP, market price. You understand? Or market order. You understand? Now CMP means current market price. You understand? So now the thing there is this: if you are using a buy limit, it means okay, let's assume I want to take gold and I want to sell gold. And after my analysis, with all my analysis, I now discover, oh, gold just broke a zone and I expect it to come back. Maybe it's here I want it to come back to. Then I expect it to come back to that zone. I expect it to come back to that zone before selling. You understand? I want to sell. Now, if I want to take this position, remember, on this position, what am I expecting? This market must move from this zone to this zone before it trigger and sell. What I will use to take the trade is sell limit. Now, this is it. If you come to your chart, select it, put, let's assume here, and you set your stop loss. I have taught you guys how to interpret signal. That is something like this. Now set your stop loss, set your take profit. So when you go to your broker, what you select is sell limit. Now you will ask yourself, what is the purpose of that sell limit? Sell limit is just telling you that, oh, I want to sell this market, but this market is currently below my sell zone. Yes. Now I have gold in my shop. I'm just explaining. I have gold in my house and I want to sell it, but the price is too low because I definitely know that this market will definitely come as high as this level. And I say, oh, okay, instead of selling at this zone, I will sell at this zone. Then sell limit is like the market is, you want to sell it, but the market is low, that you want it to come up. You understand? That is when you use sell limit. Then you will ask yourself, what's a buy limit? Now let's assume that after doing the analysis, this place now is where you expect to buy it. Now you mark out your orders and everything, mark it out, and put your entry. Now, what you are saying in this zone is that, okay, yeah, gold is here and I want to buy gold. But the problem is that the price currently is high and I want to buy it when it has come down. So what you are going to use is buy limit. What is the meaning of why are you using the buy limit? The reason you are using the buy limit is because when this market gets to this zone, you will place the order, but the market have to get to this zone before it will trigger, before you can go in. So whenever the market gets to this zone, it will now trigger for your buy. Then when you start buying, you start making your profits. The same way that is if you are selling it. When you get to this zone, it will trigger whether you are online or not. Then if you start moving to profit, you are making money. Then some people also there's something we call buy stop and sell stop. Buy stop is this. Oh, let's assume gold is here now. Now you want to enter a trade and you want to buy gold. You understand? But you cannot enter gold here because if gold does not break above this level, that means gold will sell. But if you break above this level, that means definitely gold will buy. At that point, you know that gold is on a resistance level. Let's assume here is maybe a support level now. This is a support level, and you want to sell. And you know that once you break your support level, yeah, it will definitely sell to this one. Then you now place an order and say, oh, from here, this is my sell stop. This market, As you are here, don't sell. But once you get to this level, once you have broken this place and get to this point, trigger, you can sell. You understand? That is exactly what you are telling the market to do for you. Hope you understand. So now, the same thing is applicable to if you are buying. This is a support zone, and maybe market is here. You are not telling market, oh, if this market can break this support zone, trigger and buy. That is buy stop. That is when you use buy stop. Then CMPs, when you are using CMP, you are definitely telling the market, oh, this market, so when you get to this zone, you are currently on my zone. If you are using CMP current market price. So you are telling the market, you are currently on my zone, and I want to buy gold. So as you are on my zone, just buy at the current market price, whatever the price is now, just buy it. Now that is where this spread I was explaining now comes in. This spread now is not telling you that when you take any trade, if you are buying gold, if you enter CMP, remember the price is here. The company will not buy at this particular, they will not sell it to you at this particular price. They will move it upward. Now let me explain it. Let's assume you have gold. You understand? Okay, someone told you to help him sell gold, and the price he puts the gold is at this price, which is 3315.2. That is the price he puts it. Then you that is selling it, you need to make at least more profit. Then you now put it instead of 3315.3, then you now say it will be 3316.58 or 59 anything. That's nothing you added on it. That is what I'm using as example. It's not supposed to be the example, but I'm just using it for you to understand what I'm trying to say. You understand? So they are now putting it here to make their little profit. So the broker you are using, they are also making profits from the money you are investing, you are trading with. So that spread is that, oh, I'm not buying the same price. Oh, remember this is a black market. So when you buy, it will trigger from here. That means from this zone to this zone is their own profit they have already secured. We call it spread. Then if you are selling, if you sell at CMP, the market have to move. If I sell for here, then the market will trigger at this zone. Yeah, that is why most of the time when your market triggers, you will see the revenue loss at the first time. Then even if the market is coming to your entry at the positions, maybe when you wanted to sell here, the market is now coming and trigger this level. If you are going in for a sell, this one that is red, this one that is down, which is ask, this one that is down is what must cross to your entry. Let's assume the correct market price hits your entry and reverse, but this level did not cross it, your market will not trigger. So far you're selling, this one will cross this line, the current market price will cross the line, then this particular one will cross it. Is this particular one down that will pick it. That is, the one down is ask, the one up is bid. You understand? So that is how it works. Thank you so much, guys, and keep up with our updates. Thank you.